For years, the fire and security industry went under the radar. Repeat, steady contracts driving predictable cash flows. But isn't that what private equity loves? And it's feeding directly into their roll-up strategy. Over the past number of years, 40% of transactions now in the sector directly involve private equity. And that's driven by three key factors: repeat and recurring custom, compliance-driven demand, and a fragmented market. I'm Kieran McKeever, and over the past half decade, I have executed and advised on over £150 million worth of transaction value. And recently, I have left the corporate world to join my family business to invest in and advise on family-run businesses so they can achieve great exits. So why do investors love this sector? Well, I think it can be compiled down into three key reasons. The first is compliance drives stability. Fire safety is a non-discretionary spend, and post-Grenfell, regulation has tightened, and that means during economic downturns, revenue is very well protected. The second is recurring revenue. The industry acts on multi-year contracts, and as long as incumbent providers provide high quality service and strong relationships at sensible pricing, they are likely to remain the incumbent supplier. The third is fragmentation of the marketplace. There are over 2,500 operators across the UK, and most of those sit between 500k worth of revenue up to 5 million, the perfect sweet spot for private equity investment. So what does that mean for business owners out there right now? Well, if you do own a fire and security company, it may be worth more than you thought. Consolidators continue to pay premium values for very good operators. Most notably, BGF have just divested their investment in BB7 to a larger trade provider, showing continued activity. But if you are looking to divest, what I would do is look at your financials through the lens of an investor or acquirer. Two key metrics to consider are: what level of your revenue is maintenance contracts? And secondly, how high is your net margin? At minimum, acquirers will look for 10% net profit. Secondly, timing is everything. Liquidity remains strong across the UK for acquisitions and deals. However, there are a number of telltale signs that we might be moving into a recessionary environment. Warren Buffett sits on record levels of high cash reserves, and there are a number of indicators starting to show that the economy may creak. Although fire and security is a protected market, liquidity is imperative for exits, and if private investors no longer feel confident, they will not deploy capital into deals. But if you're a business owner that's looking to hold on to your company for the foreseeable future, you may be interested in the long-term trends that are exciting investors. And that's most notably AI infrastructure that is fueling the construction of data centers across the UK, supported by both private investors and government funding. Data centers have unique properties that feed well into fire and security, most notably that they operate for 24/7, i.e. have zero downtime. Secondly, the information within these data centers are very sensitive and therefore need security and protection. And finally, the infrastructure and technology that sits within these data centers need to operate at high heat levels. All three of these elements combine well for fire and security providers to feed into the sector and benefit from the high levels of growth of construction, but also the maintenance work which falls out the back of it. And so if you are a fire and security provider and can pivot into this end sector, it will be a very smart move to do so. Easier said than done. So to conclude on this video, Fire and security now is a sector rife full of private investment and consolidation, and I'm backing that trend to only further continue.